It is that special time of year, the Christmas of the mining calendar. It is PDAC week out of Toronto, often called the world's biggest mining conference, and we have all the details here for you, ladies and gentlemen. Welcome to the Northern Miner Podcast. My name is Adrian Pocobelli, and it seems like things are going quite swimmingly. From what I can gather here, we are seeing some pretty interesting, comprehensive coverage coming from the Northern Miner. So we're going to look at those stories. You know, Robert Friedland out there advocating the U.S. not go to war with China. Hopefully that's not seen as controversial these days. So metals front and center from a policymaker point of view as the world attempts to transition over to a clean energy grid, you know, the so-called energy transition. But I still have these reservations, you know, at the back of my head. Like, it seems like we're doing so much of this in the service of automakers. Like, is it really an environmental thing to do to dig up an enormous amount of metal and all the energy that will require in order to, you know, build trillions of dollars worth of cars? Because that seems to be the plan, and all in the name of the environment. So, you know, I sometimes just step back and wonder to myself, like, has this been thought through? Do we need, you know, however many million more cars? It seems like the roads are pretty full as it is. And okay, let's say we make that argument. And I think, you know, probably most people would say we need new cars. Okay, fine. I will relent on that point. But then how long are these cars going to last? And what is our recycling plan for these millions and millions of cars? I mean, again, it seems like we are digging up the world's resources. Like, is the human species, is this why we came here, to build a bunch of cars? Is this why we're here? I mean, maybe it is. Maybe this is just the long arc of history, you know, unfolding before our very eyes. And, you know, maybe cars lead to rocket ships that lead us to the stars. So who's to say? I'm not here to lord opinion over anybody, but I share with you my private, you know, concerns on this whole plan, because we're seeing story after story. Now, one of the huge stories that we have been covering here is how car makers such as GM are actually starting to take stakes in mining companies. So this is quite a development here. And of course, Tesla has been talking to Sigma Lithium as well for a while. Not sure where that is, but the reason I bring that up is because everybody's favorite commodities bull, Jeff Currie at Goldman Sachs Group, had a very interesting comment that he told Bloomberg Radio in regard to car manufacturers buying directly into metals companies. And as he said, quote, "It always ends in tears. It requires an expertise that is very different than producing cars." And as soon as I read that, you know, it just had the ring of truth to it, didn't it? As many things, Jeff Currie says. A very quotable person. Now, in regards to cars, we had this other quote. This is all coming up in our news stories here, and we're going to start with PDAC coverage, and then we're a bunch of automaker stories. And another fascinating quote in one of the stories that I lifted out here: raw materials are now the largest cost driver for a battery. And then there was another story, again, we're going to look at all this, where someone at the BMO mining conference was saying, you know, these car companies are now sending their senior managers rather than their junior managers to these mining conferences. It's starting to hit home. So again, I just have a misgiving where, like, is this all that it's come down to, where we're just trying to make cars? And that is the meaning and the purpose of this civilization of ours. So just fun thoughts here. We have a wonderful show for you coming up. We have Brian McEwen for this week's CEO Spotlight, Vice President of Exploration and Development at Golden Arrow Resources. And he discusses the company's many projects, including one in Chile, their flagship, where they have all sorts of iron ore and cobalt and just working in Chile. It's a fascinating interview. A front row seat, really, from people who have been working in South America for quite a long time. So it's a fascinating interview there. And then also coming up for our feature content, we have Dean McPherson, Global Head of Mining at TMX. And I've met Dean, at least a couple of times at the Canadian Mining Symposium. He's a really nice guy and really fascinating interview. And it's extended. It's about 40 minutes and really in-depth on, what the TSX has to offer as far as an exchange and why, as a mining company, you may want to list with the TSX and the TSX Venture. What's the difference between the TSX Venture and the TSX, and when does a company graduate? But also more topical issues like the Canadian government forcing the divestiture of Chinese investment or investment by the Chinese government or thought to be the Chinese government, state entities into Canadian listed mining companies. And Dean, of course, is with the TMX, which owns the TSX and the TSX Venture. And so they had a very, hands-on, it was a very real-world situation for them because some of their listed companies were impacted. And further, there was some controversy because some of the properties of these companies that are listed in Canada were in places like Argentina. So that brings up a whole other bunch of issues. And then finally, then we discussed whether the Canadian government should be investing in these mines directly, something we were discussing with Anthony Malowski last week. Again, kind of a pretty novel concept, out here, I would think, in the West. But Dean, like Anthony, was saying, yes, we need direct investment. And so this is quite interesting. And, because as many of you know who are investors in mining stocks, like people tend to rent them. And it's kind of the practical thing to do. These are cyclical industries. The idea of buying and holding a mining stock for 15 years is kind of the old paradigm from an investor's point of view. Rather, you want to be like Rick Rule, where you buy low and then when it goes up 4x, then you sell them, right? But this doesn't necessarily work if your plan is to build a mine. So it's all very interesting, a wonderful episode. So let's get right to it. If you want to find us online, you can find us at northernminer.com. And again, we have excellent PDAC coverage there. You can find us on Twitter at Northern Miner and on Instagram at The Northern Miner and on Facebook, LinkedIn, and YouTube, where we also host these podcasts. And wherever podcasts are available, including Spotify, Stitcher, Apple Podcasts, and SoundCloud. And with that, let's turn to Brian McEwen, VP of Exploration and Development at Golden Arrow Resources, for this week's CEO Spotlight. Joining me today, I am very pleased to welcome Brian McEwen, Vice President of Exploration and Development at Golden Arrow Resources, to the Northern Miner podcast for this week's CEO Spotlight. Brian, welcome back to the show.
Hi, Adrian. Nice to be here.
Well, it's great to have you again. So for listeners who are not necessarily familiar with Golden Arrow, tell us about Golden Arrow, about the company, and what you're up to.
Golden Arrow's been around now for, I guess, about 30 years under the guidance of Joe Grosso. We're part of the Grosso Group. Most of our work has been done in Argentina. We've had some big successes in the past, 4 discoveries to our name, if we include our sister company, Blue Sky Uranium. Our last big discovery was the Chinchilla Silver Project. That's a silver project in northern Argentina that we discovered, and we brought in a partner, SSR Mining, was Silver Standard at the time. Long story short, we took that with them, and in 6 years, we took that from exploration, drill holes to production. And that was a big success story to be able to do that, especially for a junior company. And from that, we loaded up the coffers. We got a good deal when we sold our shares of the company, our portion of the joint venture company that we formed. And that gave us money to go shopping. And that was in 2018. And we looked at a lot of different projects. We looked at projects in Paraguay and throughout Argentina and in Chile. And this opportunity came up for us to bid on a project, a copper gold. Actually, it's an iron oxide copper gold project in Copiapó in Chile, in a great location. You couldn't have a better place. We put in a bid for that in an auction, and because we had the cash on hand, we were able to pick that up. So now we've got this project. We've had it for a year. We're very excited about the project, and like I say, we kind of got the project. We looked at it, and now we're full steam ahead, and I think things look very, very positive at this point.
Well, I think people are always excited to hear from an exploration company with a lot of experience, and it sounds like you have that. So tell us then about this project in Chile. So you're saying it's a few different kinds of metals, like iron ore, and so tell us more about the project. What's going on
Oh,
over there?
okay. So the project itself, it's in Copiapó, about 100 kilometers north of Copiapó, actually, in an area of, you talk about elephants in mining companies. We're right in the middle of, on our project, our specific project, the San Pietro project, we have a neighbor that's on the east side of us called the Santo Domingo mine, or project that's about to become a mine. And on the west side of us, we have the Manto Verde project. And now both those properties are owned by Capstone. And so the Manto Verde project has been in production for a long time. And, the Santo Domingo, they've got plans to put the project into production, and they've got a integration plan out. And this is all moving ahead very, very quickly. And right in the middle of all that is our San Pietro project. If you take the two projects on either side, there's about 1 billion tons of resources and reserves between the two. So we're right in the midst, 1 billion tons east and west of us, and we're right in the middle. We're I like to say, the jelly and the donut of the two. So we couldn't ask for a better location. We just happened to be in the right place at the right time when we got the project. And the project had been owned by Sumitomo in the past. Sumitomo and Teck, actually, prior to them. They had worked on the project from 2008 to 2012, and they put that project on the shelf. And after 10 years, they decided, Sumitomo did, that they wanted to get out of the business and out of Chile. So they put the project up for sale, and we bought it. So with that deal, we get 18,000 hectares, 18,500. That's 185 square kilometers, big area. A lot of targets within that area, and a lot of 30,000 meters of drilling and a lot of geophysics and all those things. But going back to your question, Adrian, what makes it interesting is these IOCG projects that are common in this area, and some of the largest in the world, or most of them are here. Well, Olympic Dam is a IOCG project in Australia, but these ones up in this area is what makes them interesting right now is because of the cobalt content. For instance, the project I talked about, Santo Domingo, they're in the process of redoing the feasibility study because of the cobalt content. It didn't fly on its own as a copper gold project in iron, but they started including the cobalt, and the value of cobalt these days, and the need for this in battery metals. It's made a huge difference. And they've got a process where they roast it and they take the cobalt out. They also recover sulfuric acid, which they use for their for the leaching process, and it's great. And what we see in our project is a lot of cobalt. I see areas that we have, when you compare the other projects in the area, we've got, seems to be a little bit higher grade. Maybe, I mean, ours are in drill holes and they've got resources, so you need to be careful with that. Ours is, a lot of it's closer to the surface, and we just see this huge opportunity that we happen to be in the right place at the right time. And so we've just started a drilling program. We started that 2 weeks ago. We're just finishing or coming close to the end of our first hole. This is a six drill hole initial program, 2,500 meters. That sits ahead of a 20,000 meter program that we hope to be drilling this year. So it's a big project, great location, big opportunity for us. So as a company, we're really excited, and we're just starting to get eyes on it. Like I say, we've been kind of working a little bit underneath the radar, with things being shut down and lockdowns, all that kind of stuff. But we come out, we hit the ground running, and, as I say, we're very excited for where we're going.
So you've only just begun drilling this project.
Yes, that's correct. Just 2 weeks ago, our first drill hole. But as I say, we got a 20,000 meter program planned. Well, if everything goes well with this, and the reason these 6 holes are first is because when we picked up the project, we looked at the database, we looked at all of the interpretations, and we had some different ideas of what was going on there, and we did some geophysics that supported our ideas. So this for initial 6 holes is based on our reinterpretation, and from there we'll decide on how we go with the follow-up drill program.
Fascinating. And how is Chile? I mean, you hear a lot about South America these days, and Peru and everything. How is Chile going for you? And maybe investors who might think this sounds really good, they might have reservations. So what do you have to say to them, because it's in Chile?
As a company, we've looked at pretty much all of those different countries, and we had success in Argentina. As far as like getting things done and mining, it just doesn't get better than Chile. I mean, you've got these big companies investing and going ahead. There was a little bit of a scare a year ago because they're in the process of rewriting the constitution of the country. And one of the things that had been proposed is to nationalize copper and lithium and some other minerals and stuff that they thought were so there were, what they were calling strategic or whatever. And so, there was a scare there for investors, but, that's gone to a vote and it was voted down and, everything is going ahead. And I know the other companies that are in the area, Capstone and Teck and, NGX, all these people, they're barging ahead, big investments. In Chile, it's such a pleasure to work in Chile because you can get it done. You probably pay a little bit more than you do in some of the other countries, but it happens quickly. We got our drilling permits really quick. We get our environmental permits really quick. So it's a good place to be working. For mining, I don't think there's a better place.
Okay, so quite a positive review then. So tell us a little bit about the team then as we wrap up. So who are we dealing with? I mean, all that experience that you were talking about earlier in the interview, I assume some of those people came along for this ride.
The group has been together now for a long time. Different people in there, the management, the group. I mean, there's I don't know how. I think I'm probably one of the newer people, and I've been there 10 years. But there's a vast amount of experience on the technical side and on the business side, marketing side, legal side. And in Argentina, we've got just an excellent team down there, headed up by Hugo Carranza, our chief geologist down there. And now we've put together this group that's working in Chile. We've got a very strong Chilean team, all very well experienced, all very professional. It's not like you see in a lot of the other junior companies. We're a very well established team. We've worked together for a long time. All of us have very good experience. So I'm very proud of the team. Very, very happy to be with this group. Our success speaks for itself.
Okay, excellent. So just as a final question here as we wrap up, what is your message for investors who are considering investing in Golden Arrow?
I think that the message that I think people need to consider in our company, as well as any other junior company that you're buying it, is you want to look at experience of the group. Have they done this before? I mean, who's in there? You want to look at their projects or where they're working. Is it geopolitically safe? And then you got to look at where are they financially? Do they have money? Are they going to go out and do this big financing and dilute the company? And so when you look at Golden Arrow, I mean, we're very strong on the team. We have a very good project that I just explained moving ahead. And right now we have money to, execute this 20,000 meter drill program and move ahead. And, I should just touch on the fact that we do have other projects in Argentina, some of these things that we've joint ventured. Any one of those could be a company maker, the ones we've joint ventured, the ones we're exploring. But right now our main focus is on the San Pietro project. And, I think that the fact that we're doing our drilling now, we're going to have this pipeline of information coming in. It is a good time for investors to get in before we pull this all together. So I encourage people to have a look at us.
Well, you'll have to keep us updated. It sounds super interesting. And like you say, cobalt is pretty topical metal right now. Brian McEwen, Vice President of Exploration and Development at Golden Arrow Resources. Thank you for joining us on this week's CEO Spotlight.
Adrian, always a pleasure. Thank you.
And thank you to Brian McEwen and Golden Arrow Resources for sponsoring this week's episode of the Northern Miner Podcast. Turning to the website, Make Metals with China, Not War. Robert Friedland tells PDAC, and this is by Colin McClellan at the Northern Miner. Robert Friedland, founder and executive co-chair of Ivanhoe Mines, says the West shouldn't go to war over Taiwan because it needs investments from China to mine metals for the global green energy transition. Canada's order last year for China to divest from Canadian companies' critical minerals projects deprives junior miners when investment bank Goldman Sachs says $2.8 trillion is needed to meet carbon zero targets this decade, the financier told hundreds at the PDAC conference on Sunday in Toronto. Quote, "We're going to have to find capital from Americans or Saudis or sovereign wealth funds, but we need a lot more money coming to junior mining, orders of magnitude more. So I'm all in favor of not going to war over Taiwan." End quote. The integration of the world economy peaked in about 2008 when China was buying about half the world's copper and making almost everything the world consumed, Friedland said. Since then, the global economy has lost trillions of dollars through balkanization and trade wars after former President Donald Trump imposed tariffs on Chinese goods that President Joe Biden hasn't rescinded. Quote, "So we see a gradual, slow drift towards war between America and China. This is a very bad idea. We should compete like the Harvard-Yale football game and break each other's collarbones according to a set of rules, end quote. And scrolling down a bit, Friedland said mining is under increasing pressure to produce green energy metals and ran through a series of statistics. 2.3 billion people have migrated to cities over the last 35 years. People breathe the most carbon dioxide in the air in 2 million years at 420 parts per million. And the Russia-Ukraine war has fired 50,000 tons of copper into oblivion using just one type of artillery shell among many. He also said electric vehicles hit a 10% market share in 2022, 8 years ahead of a forecast by the International Energy Agency, and renewable energy capacity reached 320 gigawatts last year, about equal to 320 nuclear plants. That is impressive, if true. Quote, so the United States government initiated the U.S. Inflation Creation Act, setting aside $370 billion. You know, when there's a problem, go to the government, they'll solve it for you. Of course, there's going to be a freakout fighting over this money. However, Friedland said he's open to putting some of the funding to join the $900 million invested in Toulouse, France-based iPulse. That includes money from Bill Gates and Jeff Bezos-backed Breakthrough Energy Ventures. Friedland is chairman of iPulse, which uses high-energy bursts to shatter rocks and mineral ores with a fraction of the energy cost and greenhouse gas emissions in conventional mining. Finally, we have a few quotes here. We're sort of like on a mission from God, like in the Blues Brothers, to completely change the way we've operated in mining for about 1,000 years. We're pulling rock apart with electromagnetic pulses. We have a magic pair of glasses that allows us to directly see deep mineralization in the earth with very high resolution. It's also based on signal-to-noise ratio in the geophysics and machine learning for the software. Friedland's breakthrough in lithium batteries comes via Ivanhoe startup Pure Lithium in Boston, and the help of Donald Sadoway, an emeritus professor at the Massachusetts Institute of Technology. Quote, this is a battery with lithium metal, which is very disruptive and frees you from the requirement to use nickel and cobalt. It's a very high-quality battery, Friedland said. So you can read the whole thing at northernminer.com, but it is entertaining and informative as usual. And we have another PDAX story. Energy Transition presents Canada with mining windfall, says McKinsey's Hoffman. And this is by Blair McBride. The shift to green energy will demand the use of all metals, not just critical, in a multi-trillion-dollar industrial transition, said McKinsey's Ken Hoffman at PDAC in Toronto on Sunday. Delivering the first keynote speech of the 4-day conference, Hoffman, who is head of the consultant's battery raw materials team, said the key critical metals like lithium and cobalt will be needed for the transition, but so will many other metals. Quote, it's the entire spectrum. All sorts of metals are going to be needed. Lots of copper. There's a lot in infrastructure. We're going to see a lot of aluminum. We're going to see a lot of nickel. And he also mentioned the Inflation Reduction Act passed by the U.S. Congress last August that earmarks $430 billion in spending to incentivize clean energy technologies. And we have a quote, the IRA could add $1 trillion to the battery and sustainability value chain. $1 trillion. It's changed everything. It's going to change metal flows. It's going to change the pricing. It's going to introduce premiums. And a couple of more quotes here. The energy transition will be everything, absolutely everything. The industry itself is looking at something like $15 to $20 trillion impact. And guess why? In the U.S., they don't want to mine, but they want to buy from sources deemed localized, deemed acceptable to U.S. regulators. Canada, we love you. This is where it will come from, Hoffman said to laughter from the audience. And a final quote here. It's the perfect time to go to governments. How can we particularly work with indigenous communities and how can we train people? It's such a no-brainer. I think miners need to have their ducks lined up. What's your strategy for getting the original equipment manufacturers interested? What is my ESG? Am I working with local communities? How am I going to have this refined? If you're ready with the right project and the right boxes ticked, you'll do well. So it sounds like everything is about the energy transition over at PDAC. And here are some other stories. This is Reuters via mining.com. Volkswagen board discusses 2 new North America plants at meetings. So this is what Germany and Europe have been fearing is Volkswagen. Do you remember the story from maybe a month ago where they said we can't build in Germany at these prices? Even with energy down dramatically, it's still not down enough. And now Volkswagen's board discusses 2 new North American plants. Volkswagen Supervisory Board will on Friday discuss plans for 2 new factories in North America, 1 production plant and 1 battery cell factory, 2 people familiar with the matter said. While the committee is expected to approve a site for its Scout brand in the United States, Discussions around a gigafactory are open-ended, the sources said. Other issues on the meeting's agenda are Volkswagen's annual results and its dividend, the people said. And we have a quote from a spokesperson. We are still working hard to find a suitable location for our first gigafactory in North America and are in good constructive talks. Well, it sounds like they're doing it in North America. And it sounds like they're considering Canada as, quote, one logical option. Another car story. Shortage of metals for EVs is rising up the agenda in automakers' C-suites. This is Bloomberg News via mining.com. The merry-go-round of private meetings at an annual mining industry conference at Florida's Hollywood Beach had a cast of new faces this year. Auto sector executives increasingly anxious about surging prices and tighter supply of metals used in electric vehicle batteries. It's interesting. It's not just the vehicles themselves, but they're particularly concerned about the batteries. That is interesting. Tesla, Ford, and Mercedes were among automakers which sent senior staff to mingle with about 1,500 delegates at the BMO Global Metals and Mining Conference, an event normally attended mainly by iron ore and aluminum producers. Their presence underscores the growing popularity of battery-powered cars, helped by a global push towards clean energy, which is estimated to require $10 trillion worth of metals through 2050, according to Bloomberg NEF. Car producers had, quote, room-to-room meetings with a lot of companies like ourselves trying to understand how to address their own supply chain, end quote, said Trent Mell, an attendee and CEO of Electrobattery Materials, a Toronto-based developer of mining and refined projects. Auto companies have recently expanded their teams and are now filling rooms with specialists in metals like lithium, the metal that's ubiquitous in electric car batteries, and manganese, or in battery recycling, he said. Quote, once you might have had one or two people dealing with raw materials procurement, and scrolling down a bit, lithium was, quote, a meaningful source of cost increase, end quote, for Tesla in the final quarter of 2022. CFO Zachary Kirkhorn said in January, while a key lithium benchmark has tumbled almost a third this year, prices remain 590% higher than at the start of 2021. Volvo, NIO, and Jeep maker Stellantis have also said they're being affected by the impact of higher raw material prices, and some are looking for new deals with suppliers to tie up potential sources of metals. Like others, EV maker Rivian Automotive is spending a lot of time examining potential new deal structures with suppliers, and this could involve ownership positions in mining assets, CEO RJ Scaringe said on a February 28th earnings call. So the plot thickens on this whole automakers taking stakes. Now Rivian is saying it as well. GM last year struck a prepayment deal for lithium, while Ford Motor offered a loan to help fund a mine project. And we have a quote from Andrew Miller, COO at Benchmark Mineral Intelligence, an industry data provider, who said, quote, investing in these raw materials provides a way for automakers to control margins along the supply chain and ensure they remain competitive. Raw materials are now the largest cost driver for a battery. So the plot thickens there. Now the pension funds are getting interested. Battery metals projects catch eye of pension funds and car makers. Now this is Bloomberg via mining.com. And let's just take a very quick look at this one. Critical minerals are attracting new interest from pension funds and automakers to help tackle a looming shortage. The rush for metals, lithium, copper, and nickel needed to power electric vehicles has, quote, clearly brought the sector into a spotlight that it wasn't in a few years ago. Ilan Bahar, global mining co-head at BMO Capital Markets, said during a Monday panel discussion at a mining conference in Toronto. Well, I assume that mining conference is PDAC. And continuing on here, governments worldwide pushing for EVs, quote, really quickly, end quote, to meet emissions targets are discovering supply constraints for key metals, Bahar said. Quote, what everybody quickly realized is, one, that the supply is not fully available here, and two, that it's controlled by a certain country that has a 15-year head start, end quote. And as far as pension funds are concerned, they're starting to consider investing in battery metals industry, though some have expressed concerns tied to environmental, social, and governance issues and bureaucracy, said Navdeep Bains, vice chair of global investment banking at CIBC. Quote, I've talked to pension funds and they've been like, we'll invest in this space. We've heard of the OEMs investing directly, but we have to see indigenous issues resolved and permitting issues resolved, Bains said. Well, that'll probably be on a case-by-case basis. BMO's Bahar said the sector will need more outside investment to meet future demand. Quote, we need a certain amount of supply that doesn't yet exist, and we need investment beyond the amount of dollars in institutional investment funds. End quote. Well, I don't think it's news to anybody on this program that we need these things. I think we've known for years, actually. And just a couple more here. EU, US working on deal to make EV minerals eligible for tax credits. This is Reuters via mining.com. The US and the EU are working towards agreements in principle on a deal to make European minerals eligible for tax credits, a senior EU official said Friday. The $430 billion US Inflation Reduction Act passed in August requires rising percentages of battery minerals to come from the US or a free trade agreement partner. The EU official said an agreement could come as early as next week in time for a visit by Commissioner President Ursula von der Leyen to Washington on a deal that would give the EU, quote, free trade agreement-like status. And White House Press Secretary Karine Jean-Pierre said, we want to make sure there's a good working relationship. Up to $3,750 per vehicle of the available tax credits relate to critical minerals for batteries, taking effect when the U.S. Treasury issues guidance, which is expected later this month. The EU official said it was critical to reach an agreement soon, given moves by some European companies to shift production to the United States. Quote, we need to react now, and we need to at least avoid as much as possible these disturbances by granting an FTA-like status and having better access when it comes to raw materials, battery production, for example. Well, I'm not sure the U.S. is going to feel the same rush. So the EU and the U.S. continue their strange relationship. To editorialize, it's like, we're all friends on the surface, but under the surface, if you were to just, take that relationship economically and look at it objectively and just remove the names that are involved, I'm not sure you'd have the same, picture of the relationship that we see on the surface. Let's just put it that way. A couple of more headlines here. Peruvian communities to resume blockade of crucial, quote, mining corridor. Also Reuters. So sounds like protests are about to resume. Andean communities in Peru will resume a blockade of a crucial highway used by major copper producers next week, two local leaders said on Saturday, following a truce that had allowed mining companies to restart production. Peru, the world's second largest producer, had been facing protests since the dismissal of former President Pedro Castillo on December 7th, including blockades of roads through which mining companies obtain supplies for their operations. So you can read the whole story on mining.com. And a couple of headlines. Neocorp's stock rallies on $800 million funding interests for Elk Creek. So Neocorp, of course, makes some rare earths, I believe, niobium, scandium, and titanium, all considered they're critical minerals. They make critical minerals. And they also have a processing plant in Quebec. So that is probably the big sell. And you can see the picture of it on northernminer.com. Those are your news stories. And now let's take a look at metal prices. And turning to metal prices, let's just look at the 10-year bond here. Wow, the U.S. 10-year Treasury bond is at 3.96%. So right below 4% again. And they've actually just fallen as investors anticipate Fed Chair Powell's remarks. So let me just look at the chart here. At the 1 day, so they hit 3.99% in the last couple of days, so right at 4%. And let's just look at the UK at the gilts. And what do they have? UK 10-year bond, 3.82%. Again, a little close for comfort to that 4% zone, isn't it? So turning to our metal prices, gold is at $1,835.81 per ounce. That is $25 higher than last week. Silver is at $20.74 per ounce. That is 11 cents higher than last week. Platinum is at $953.75 per ounce. That is $13 higher than last week. And palladium is $12 lower at $1,420.52 per ounce. Copper is 5 cents higher at $4.04 per pound. Aluminum is 3 cents higher at $1.08 per pound. And we're going to add iron ore to the mix by special request to a listener on YouTube who mentioned that iron ore is actually a good gauge of the Chinese economy. So let's start doing that. Iron ore is at $125.50 per ton, and lead is 2 cents higher at 96 cents per pound. Nickel is 21 cents lower at $11.06 per pound. Tin is 27 cents lower at $11.49 per pound. Cobalt is 30 cents higher at $15.50 per pound. Lithium, which we're also going to start tracking here, is at $51.54 per kilogram. And zinc is at $1.38 per pound. That is a penny higher than last week. I mean, what do we see as a general wind in the sails of the metals with a couple of exceptions? And so it feels like, let's look at the stock market here for a second, just to compare, because it seems like the metals are basically moving with this risk-on, risk-off trade. And there we are, the S&P 500 is above 4,000. So it's at 4,010. So what I see is just general, a little bit more risk-on than last week, and therefore our metals are higher, and those are your metal prices. And coming up, my interview with Dean McPherson, head of global mining for the Toronto Stock Exchange and the TSX Venture Exchange. He is responsible for the development and execution of the global strategy for attracting new listings in the mining sector to the exchanges. And again, the TMX owns both the Toronto Stock Exchange and TSX Venture, if you get confused. So he's head of global mining at TMX. Thank you, Dean, for joining us. It was an awesome interview, and I hope you enjoy it, dear listener, and we'll see you on the other side. Joining me today, I am very pleased to welcome back a familiar face in the mining scene, Dean McPherson, Head of Business Development for Mining at TMX Group, to the Northern Miner Podcast. Dean, welcome to the program.
Thank you. Thank you very much. Happy to be here. Good to see you again. Always great to participate with the Northern Miner.
Well, we appreciate that. And yeah, I mean, I've met you before at the Canadian Mining Symposium in London a couple of times. So anyways, it's great to see you over the airwaves here, so to speak. So tell me, you're at TMX and you are head of business development for mining. How are things going in the context of mining and the TMX? So what's new? What's going on? How are you guys feeling? Just give us the latest on what's going on there.
We're feeling pretty good. We're pretty excited about the path forward here. Like many people in the mining sector, we are pretty excited in spite of a little bit of a slowdown in the market and certainly in the past 6 months. But the fundamentals certainly point to a lot of reasons to be optimistic and excited. And I think we're the same. As I move around and talk to participants in our sector, stakeholders from companies listed and from companies considering a listing, and bankers as well, and other stakeholders, there is a general mood of optimism despite the slow markets over the past 6 months. And I think that really has to do with the fundamentals. If you take a step back into, I would say, the latter half of 2020, of course, the pandemic was a shock to the markets. And once there was an adjustment or digestion, if you will, of that shock, the market sort of took off, right? Particularly around the precious metals and battery metals. And I think as we moved into 2021, battery metals really took center stage and was the focus for everyone. I think as investors and broader stakeholders outside of the mining sector came to realize that the mining sector actually has a pretty critical role to play, pun intended, in attaining global objectives around the energy transition strategy that most governments were embracing. And so that I think was really the bottom line, the underlying momentum for 2021 being the year that it was. I think the sector around the world, not only on our markets, excelled and certainly had the best year in terms of new companies joining the public markets and companies raising capital through the public markets. We had a stellar year, and I think if you look around the world, you'll see the same. 2022, again, due to the fundamentals and the recognition by broader investors that the mining sector was very central to supplying the commodities needed to support the energy objectives, global emissions reduction objectives globally. As that momentum pushed into 2022, we were also optimistic. Of course, no one anticipated the external shocks to the marketplace, in particular the war that kicked off at the end of February last year. That certainly had a significant impact, adding to the already challenges we were expecting from the pandemic recovery. And so 2022, although at the start we were hoping to be great, turned out to be a period of, I don't know what you want to call it, but let's say challenge. Certainly by September last year, it was challenging. The markets had slowed significantly. And as we came to the end of last year, I think broad expectations was that the first part of 2023 was going to continue to be challenging as the market sort of rolled out. Investors were expecting to ride out the global recession that seemed imminent. So I think we're in the middle of that right now, and certainly we feel it in the marketplace. We've seen a slowdown in IPOs, new companies coming to the public markets. We've seen investors sort of trying to step to the side and understand how long this recession is going to be and what's the impact. So there's been a general slowdown in the marketplace. Again, it is as per expected. The expectation seems to be that the first half is going to be challenging. The good news is that it's been better than we expected. One key indicator in the space is the amount of capital being raised. We've seen financing activities picking up at the end of last month, and certainly by the end of January, in fact. We've seen some pickup in select deals. It's not at the pace that we are happy with, but certainly it was encouraging and has been encouraging to see that pickup in financing activities. And I think generally this has always been the case as you see select deals starting to get done, being pushed across the line. Eventually we will have a full-on pipe of financings that are being done. On the IPO front, I can say that a few of our issuers that were expected to come to market by the end of last year and had put a pause because of the market trepidations or investors' trepidation that I mentioned earlier. We're seeing now those IPOs are coming back and say, okay, we're beginning to market, we're beginning to talk, we want to start the wheels turning to hopefully have an IPO before the middle of this year. So all very encouraging signs, and certainly going back to the fundamentals that sort of pushed 2021 into the stellar year it was, those are still there and perhaps even more urgent than before. And certainly the Canadian government, the American government, and the Australian government, of course, were ahead of this. But we are all seeing governments now pushing to execute on their critical minerals strategy, and those objectives are still real and still in focus. And as they are, the mining sector's fundamentals are still very, very much positive.
Well, that's fascinating, and I definitely want to get into the relationship, say, between the government and mining. But before we do that, just still on the TMX briefly here, it's been a very difficult 10 years, you might say, from 2010 to 2020. In the mining sector, or maybe 2011, pick your year. So in the context of where we were, say, in the last, bull market or 2010, are there more mining companies now? Are there far less? I imagine there would be less, but I don't know, which is why I asked the question. Like, how are we doing in terms of just publicly listed mining companies in Canada?
I think we're doing great. I don't think the bear market extended as long as many might think. If you look back, the market really started coming out of that bear zone back in 2017, maybe even as early as 2016. We started to see the sector coming back to life. And certainly by the end of 2017, there was a revival in the marketplace. What was new was the volatility. The volatility was quite high after 2017. And, we've had periods where companies or investors were excited, and the market was doing well, and companies were coming to market, raising capital, etc. And then we had long periods of slowdowns. So what was new in this new phase of the mining sector? Well, certainly I wouldn't call it a bull phase that we had prior to 2011, but there was a pickup in the mining sector. And I think it was new. The mining sector had come back in a way which was interesting, in that there was a bit of a redressing, a new approach to business. Larger companies were a lot more disciplined, management were more disciplined, investors were asking more. Factors like ESG became more important to investors, and as a result, more important to companies, large and small, as well as a broader sense of fiscal responsibility entered the market, especially for the larger miners. So you saw a bit of a slowdown in M&A activity, and then those deals that were done tended to be a lot more, let's say, generally accepted as prudent. So, the sector has shown life since 2017, and good life as well, very encouraging, and came back in a way that I think many would agree was dressed more appropriately for the new age and the new demands of not only investors, but stakeholders generally. A new way of doing business where diversity was important, where female participation in the workplace and at senior board levels as well, not just operation levels at a lower level, and a broader accountability to the environments in which they operated was all factors that I think added to the long-term, or are adding to the long-term success of the mining sector. And I think if you move the needle along from 2017 to 2021, let's say, we had this stage where, maybe perhaps because of many external factors, the war, for instance, COVID, the mining sector sort of experienced a bit of transformation, in the sense that broader generalist investors started to recognize that this is not the evil sector that needs to be erased from our industries, but one that was very, very important, and without which we will not be able to do this energy transition that we've all certainly come to realize it is going to be a big part of any objective to reduce global emissions by 2030s or 2040s, that type of time frame. So, the energy transition is a big part of meeting those objectives. And at the right time, most people came to realize that the mining sector, we need the commodities from this mining sector to be inputs into the technologies that we have today to execute on this energy transition. So it all came together quite well. And so what all that did was we're in a position right now where we have fundamentals are saying, okay, so investors, stakeholders have recognized the importance of the sector. The sector is more prepared for the spotlight in just the way it does business. It's one of the most modern, efficient, and forward-thinking sector in terms of how it does business and interact with its environment, and it had to do it. It wasn't by choice. It was demanded of investors and stakeholders in which communities in which mining companies operate. Are we perfect yet? No, there's still work to be done. But I think if you take the mining sector up against any industry globally, you will see that it measures pretty well, just because of the nature of its business. It needs to be at the front because it's such an impactful sector, and the impact is immediate in many cases. So the mining sector is prepared for the spotlight. And I think the encouraging thing is that the fundamentals, again, support a lot of reason to be positive about the future. So yeah, we've had many companies transformed, companies acquired, companies disappeared, maybe perhaps bankrupt. But overall, you'll find that the level of mining companies has not diminished. We currently have over 1,200 mining companies listed on both our markets, and the majority of those, just over 800 of them, are listed on our growth market, the TSX Venture Exchange. So I would say any notion that the mining sector has diminished is dead. I think more companies are coming to market. We're certainly seeing no sharp decline in mining companies coming to the marketplace. From every year you might not have the same number, but we're certainly seeing growth, and we're happy about that. We're very enthusiastic about this sector. For us, it's still a large part of our business, And so, and globally, it's a business that we're proud of because close to half the companies listed globally are listed on our markets, and more, close to half of the financings done globally are through our markets as a result. So we are still the center of it for both investors and companies listed and ones looking to get listed. They tend to look to our marketplace first.
So, yeah, that is my understanding, is that the TSX is, in fact, and correct me if I'm wrong, the preeminent exchange for mining globally, as far as I understand. So,
absolutely. I think if you have half the publicly listed mining companies listed globally on your marketplace, I think that's a pretty strong argument to say you are the preeminent marketplace.
I would concur. So when a mining company, or big or small, when they're considering listing on the TSX, why should a mining company list on the TSX? Like, what do you tell them? Like, what is the benefit for them instead of not listing and just staying on the US markets or London or whatever the case may be? Why should they list on the TSX?
Well, I think the conversation naturally starts with the last point I just made about more companies are listed with us than any exchange globally. So if you look at the volumes traded with us as well, it's a very active marketplace. We have a place for every company. We're not a market that favors or have some sort of prejudice to large cap companies. We are a market that embrace early stage companies. We embrace and we have a very extensive and well developed and a strong team of professionals, capital market professionals, ex-investment bankers, ex-salespeople, ex-lawyers who have joined the TSX to work with companies and provide almost consulting service to our issuers from the point of us making contact at the prospective stage, where we're meeting with companies that are private looking to come public, to companies that are already listed with us as they grow from 20 million, 5 million market cap up to 3 billion, 3 billion market cap. Our commitment and work with those companies is nonstop. And as I said, a lot of the services that we provide are at the highest level of consultancy, capital markets consultancy, because the success of our issuers is critical for us. So I think that's a large part of those services that we offer is why we have more companies listed with us than any other exchange globally. When I meet with a company that's looking to go, that's private, let's say, and they're considering different markets or etc., presenting to them a marketplace that has not only within the TMX Group, but externally as well within Canada, an ecosystem of professionals experienced in the mining sector and have the deepest knowledge and expertise to help them succeed as a company and to grow, to create value for their shareholders, and realizing that this is an objective and a practice that is in concert. Again, not only with us, with our internal professionals that will work with you and support you going forward, but with also the broader ecosystem of professionals that we have in Canada from our history of being a mining jurisdiction itself. So you are within a country, Canada, financially stable, sound banking system. We are operating a financial market. And we are inviting you to join a financial market in a strong country, strong financial background, stable banking system. And we're inviting you to join the largest pool of mining companies globally that have nothing but success on our market. Many stories of companies starting out, as I said, from as little as $5 million market cap after doing a RTO or a qualifying transaction through our CPC program, to being multi-billion-dollar market cap companies in the space of 5 years and having investors like BlackRock, having other market global investors who are trying to get exposure to the mining sector and growing to a level where you're so large that you might add index opportunities in other markets as well. So many examples of these are on our marketplace. So This is the key sell, really. You're given an opportunity here to join a bespoke market with many avenues of getting listed, depending on where you are in your life cycle as a company, from very early stage to larger companies already producing, have a place in our market. You can go to the TSX or the TSXV. You can use one of the several methods of going public that we have. So it's a very bespoke operation in terms of process and in terms of the help that we provide after you're listed too. That we work with you to ensure that your exposure to international investors, as I said, like BlackRock, etc., is at the highest. So those, I think, are pretty strong selling points. It's similar, I suspect, to what the NBA does when they market to basketball players in, let's say, Greece. And they say, do you want to continue playing in a league in Europe, or a small league in Europe, or you want to come to the largest league globally? Here's an analogy for you. We would be the NBA of the mining sector, of the global capital markets or public equity markets for mining companies, So that's the sell, really. Do you want to stay in a small league, or do you want to join the largest league in the world?
I think we have a headline. I think we have a headline for our story here. Join the NBA of mining here. So very briefly, we don't have too much time here, Dean, but I want to just get a last thing on the TSX and TSX Venture before we move on to more current event situations. But how do you see the difference between the TSX and the TSX Venture? When should a company graduate, briefly if possible?
I would say if you graduate when your investor pool has expanded to a level where you're finding that you're being restricted by being on one market. And I would say that's a very long time. We have companies listed with us that are listed on the venture that boast investors like BlackRock, which everybody would agree is probably the largest, the Michael Jordan of since we're staying with metaphors here, or analogies of the investor side. So, I would say that the impetus to move from the TSX V to the TSX should probably be driven by your investors. And because what happens is that you are exposed to a broader group of investors by graduating. You are exposed to the opportunity to be in indices, to perhaps expose yourself to a larger pool of passive investors. These passive investors through ETFs, etc., who participate through indices in the marketplace. So the opportunity to broaden your investor base is probably the key motivation, I would say. And really that motivation becomes real as you grow. And from my experience, and certainly my colleagues here at TMX Group would agree, that motivation seems to peak, certainly take momentum. You start getting calls from investors, a lot of investors in Europe, institutional investors globally, really, who often are restricted in which market they can participate. And often they're restricted in a sense that they say, we want to participate in a company listed on a senior exchange. And so then in that case, there is a strong motivation there to graduate. And the good thing is that we have a very seamless process. Once you're listed on the TSXV, the process of graduating to the TSX is amazing. We have seen an increase in companies taking advantage of that process over the past couple of years, because a lot more companies are getting a lot more interest from international investors and from the passive stream as well. And as they do, they're looking to graduate. And as I said, we have had record levels of graduations in the past 2 years. And certainly we think that will continue.
Okay, excellent. So that all makes sense to me. Now, just turning to more current events, we had this situation, I don't know, maybe a month ago, where the Canadian government was asking Chinese investment, correct me anywhere along the way in your answer, to kind of want to remove Chinese interests in Canadian mining companies or Canadian listed mining companies. There's an article in the FT that was quoting you, and you seemed, from my understanding, and again, correct me if I'm wrong, but it seemed like you were somewhat troubled by the fact that they were removing investors without replacing it with anything. So can you speak to that whole situation and what you think should happen?
Well, first of all, I would say just to correct your description of the situation. It is not. It is the case where the actual situation is that the Canadian government in their strategy to protect national interests, which certainly that's commendable and something that I think as Canadians we all applaud and encourage, decided that they wanted to take a closer look at foreign investments, and I think their objective is to monitor the level of foreign governments' interests or investments in Canadian companies, which is it's something that's routinely done. I think in this particular case, what the announcement was, they had identified 3 companies that had investors that they determined had significant influence or ownership from the Chinese actual government, right? So I just wanted to be clear on that, to correct you in that it's not that the statement from the Canadian government was that they were restricting from broadly Chinese companies. We have many companies listed with us with Chinese investors. These particular 3 companies, they, to their research and information, determined that these companies had investors, Chinese companies that were influenced or owned by the Chinese government. So that's the situation. As I said, we recognize the need to be protective and to take this action. What we were concerned with was the announcement left a few questions unanswered, and I think that created some uncertainty in the marketplace, and I think that was not good. For instance, one of these companies had projects outside of Canada, and so we were, immediately stakeholders, companies and companies listed and prospective companies were concerned. It's like, wait a minute, we thought this was about Canadian national interest, so why is it that projects outside of Canada is a part of this? And the other part of it was there was a bit of uncertainty as to how broad this action would go, like, how long and how wide. Is it at the end? Is it future? Is it that we're going to go retroactive to a bunch of our issuers and etc.? So we were asking for some clarification to remove some of any potential uncertainty that might come up as a result. That was one. The other response that we had generally was we were encouraging the Canadian government to continue to be more involved and proactive and collaborative in their approach to executing on their critical mineral strategy. We were concerned that, in executing on their objective to remove foreign influence from the national interest objective would create a vacuum of capital. And so while we're encouraged by the actions of the Canadian government over the past 5 years, I can tell you the government has been more involved in the mining sector and has been more supportive and speaking relatively, and there are probably people here listening to this and say, oh, they're not. I disagree. I do think that the government has been doing better. And I think it all started at maybe 5 years ago now, when the government actually came and announced that I think it was one of these PDAC events, that they are committed to the flow-through program beyond a year. Traditionally, the government has always renewed that commitment annually. And 5 years ago, they actually made a long-term commitment to it. And I think that was the start of what I consider to be a more supportive Canadian government in the mining sector. Is it perfect? No, but it certainly has been moving in the right direction. And certainly we have, from our position here at the center of it, the government has been connecting with us more and asking us how they can help. And this is government at the provincial level and the federal level. Last April, before the provincial government announced their budget and what they were going to do about critical minerals and the mining sector, we hosted a roundtable here. Our CEO, John McKenzie, hosted a roundtable here where we connected, we brought in companies that are listed with us operating with projects in Ontario and the provincial leadership to sit down together and through our moderation, talk about what they can do, what can be done, what we can do, what the companies can do to make the mining sector a success, a global success. And I think that's very encouraging. And only one example of many ways in which I think the government is doing more. Last PDAC, the minister, the national minister responsible for mining, the Honorable Mr. Wilkinson, was here at PDAC and met with our CEO as well. And I believe this PDAC is going to be here again, and we're hosting a market open on Tuesday morning celebrating the Canadian mining sector. And I think the minister is going to be there, and certainly our CEO, John McKenzie, will be hosting that event as well. And this is all leading up to ringing the bell at 9:30 to celebrate the Canadian mining sector. So the government has been doing a lot. And, our singular comment was with regard to this issue was the headline was a bit misrepresented by the Financial Times by saying that we slammed the Canadian government. There was no slamming. We were doing is highlighting a concern, which is what we should do as the world's leading mining stock exchange, is represent the voice of the 3,200 companies. This is across all sectors listed with us. We have a responsibility to be the voice and representation and the advocate for those companies, and indeed for the Canadian capital markets. So in that role, our comments were that we were a little bit troubled by the government making this move in the way they did. We thought could have been an opportunity to be more collaborative and remove some of the uncertainties that came up as a result of that. And also, there's an opportunity to add more capital to the sector. And I think, they have, as far as critical minerals are concerned, they did increase the tax incentive to 30%, the tax break for exploration in the critical mineral space. But we think there can be more. We think there should be more, certainly to replace the kind of capital coming from sovereign funds or, Chinese investors who have been very active in the mining space, providing capital to many of our issuers. We think that the government can perhaps be more aggressive in creating funds and encouraging investment in exploration in critical mineral space in particular. So all we were asking for is a larger emphasis on filling any gap that might arise from removing any group of investors from the capital markets.
Yeah, I mean, I looked at that Financial Times article and I would completely agree with your characterization. That was an editor run amok, I would say, with that headline there.
Yeah,
there was I didn't see any slamming in what you said.
I think it was click. I think it's really to get the clicks. Sometimes you have to.
I think so.
Well, these days you have to be very focused on the content rather than headlines.
Indeed. So just as a final thing, I want to ask you about PDAC, but just before we move on to there, and then we'll be done. But I just want to ask you about what it is that you think the government should do. I mean, I was talking to Anthony Malowski last week, and he thinks, frankly, governments actually need to invest in, they actually need to start providing capital for mines like, this Dumont nickel site he was mentioning in Ontario. They're not, going anywhere unless, put it this way. He was saying, and I think it's very true, investors are renting mining stocks. They're not, investing for the long term. As he was saying, even like the old school investors no longer are sticking with it. It's a very cyclical industry. And so people move in and out of it. So it's hard to build these things. So it's a pretty radical idea for us out here in the West, for a government, I think, to start investing in mining companies. But what do you think needs to happen?
I think you are right. I agree with this comment and this strategy in general. The government does need to start investing in mining companies. The mining sector is a long-term one. I will say, if you are looking at examples, I would say you perhaps can look at the very Chinese government indeed. Remember, all of this is a reaction to the Chinese having a head start, if you will, on investing in critical minerals. And not only from the exploration to the production stage, but also in the processing, beyond the mining sector, beyond our part of the supply chain. The Chinese have invested extensively across the entire supply chain. And I think as the government is creating and seeking to execute on their critical mineral strategy in an effort to, in reality, to really play catch up to what the Chinese have done over the past 20 years here, they will need to be more aggressive, yes, and they will need to make direct investments, rather, beyond incentives like the increase in the flow through or tax breaks. There needs to be actual hard dollars invested in the sector. This is what, and also invested in the long term, because, and why this is critical perhaps is even more so because of the long-term need that your previous guest said. You see that pattern from the Chinese. They're long-term investors, and this is why they're so often welcomed by many mining companies who had not seen that level of commitment from investors before. But certainly most of the companies that have taken advantage of those funds and I'm speaking generally of Chinese investment companies, and mining companies who have invested in so many mining companies globally and acquired so many globally. They are long-term investors and they invest hard-term funds. In terms of what our own government should do, be more aggressive, yes, and make direct investments. And again, you don't only have to look at the Chinese. You can look at the Australians. As I said, the Australians have been a few years ahead of us. The Australians have been a couple of years ahead of us. And what we've seen now recently is that the Australian government has actually started to make some of those hard investments into mining companies in the critical mineral space because it's important to them, and they're replicating effectively what the Chinese have done. Of course, not to the scale, but they're doing a lot more than us. I've seen recently the Australian government made a direct investment in final phase investment into a mining company in Western Australia to get to production, through a debt financing. And you'll know that you've seen more. You've seen a lot of investments, quasi national agencies making investments to support exploration of critical minerals in their sector in Western Australia as well. I think this is where we've got to go. The government has to set up investment funds, sovereign funds, has to put more into the mining space in terms of hard dollars, long-term investments. I completely agree with this strategy. That is what I think the sort of aggressive role in filling any gap that might arise from actions that we have seen recently.
Well, it sort of removes the vicissitudes of the market and the volatility in the markets. I mean, if you want to build the mines, here's a way, right? I mean, it seems pretty straightforward. Although it does, it does offend our sensibilities somewhat out here because we're not used to that sort of thing. But sometimes you just gotta, seemingly wake up to cold hard reality. And if you want this to happen, sometimes you just got to make it happen. As we wrap up here, Dean, what are you doing for PDAC? What do you guys have planned? What's on the menu?
We're pretty excited about PDAC. We always are. We play a pretty key role during the convention. This year is no different. We've been long-term partners and supporters of the PDAC. So we're kicking off things tomorrow with a market close to ring the bell, as we've done in the past few years. We bring in the board of the PDAC and the CEO and director, and Lisa and the team come in, and we ring the bell to close the week of trading, and to bring investors and global attention to the fact that, hey, something big is happening in Toronto starting Sunday. So Sunday to Wednesday, we're having the largest mining conference globally. And so in addition to that, we're hosting several delegations internationally from Argentina to Mexico. We covered entire LATAM, and we're ringing the bell to open the market on Monday with a celebration of LATAM mining. And so we're bringing Argentina, Peru, Chile, Mexico, Brazil. Representatives from all those countries are joining us in our market center facility to ring the bell to start the week's trading. And we're looking forward to that. And on Tuesday, we're also ringing a bell to, as I mentioned earlier, to celebrate Canadian mining. And we're looking forward to that. Minister Wilkinson and our CEO, John McKenzie, will be hosting that, where we have representatives from all the provinces joining us as well, and as well as the leadership from the Indigenous community across Canada, who are, as you know, globally, very much impacted by the mining sector. And I think we're going to show some unity and certainly have a chance to chat about some of the challenges and ways we can improve our sector going forward, and the role that all stakeholders, including this community, can play in that, and how they can also share in what we see as the rewards coming to us from the strong fundamentals in the mining sector that I mentioned earlier. And on Wednesday, the final market open for us will be to celebrate, to show our international nature. And, we have over half of our properties represented on our marketplace are actually outside of Canada. And we're having our Australian friends join us on Wednesday, the Australian government and Australian companies listed with us. And of course, those that are planning to list with us are welcome as well to ring the bell to open the market. And so those are some key events for us as well. We're doing market closes during the week, just all PDAC Central. And throughout the week, we're hosting several governments. We're hosting the roundtables with several governments. We're hosting a roundtable with the Argentinian government as they seek to share with investors how the mining sector is changing and how the economy and the plans, how the government is supporting the mining sector in Argentina. We're having a similar roundtable with the Peruvian government there, who have been certainly at the center of a lot of controversy in recent weeks. So they're bringing their prime minister and their mining minister here to talk about some of those in a round table again with our companies that are focused in that country. And we also have delegations from Mongolia, Ghana, etc. We're hosting a French Franco-Min seminar here. So lots of things going on. We're very excited. And as I said, as we see it as not only our pleasure, but certainly our responsibility to bring all stakeholders together at a time like PDAC when everyone is in town, where we can sit down and give not only governments, but companies an opportunity to talk about how we can move our industry forward.
Well, that sounds like an incredibly busy schedule. I hope you get lots of sleep ahead of time, because that is going to be, that sounds nonstop.
You know what? It's I have a lot of help. Our entire company come together here this week. Everybody at TMX Group is mining. So our marketing team, our company services team, we have many businesses as well. We have a data business that's very, very active in TMX Data Links. And we have a trust business that is very active too for many of our companies, not only companies listed with us, but all public companies globally, really. But so we are a very diversified companies. And what's great about PDAC is that it brings all of our different divisions together to show a face to all our mining companies and all these different divisions, as I said, our data business, our trust business, our transfer agency business, and of course our company services business will all be on the convention floor at our booth throughout the week, so people can come up and contact not only myself but my colleagues on the floor of the convention center and talk about what we can do to make you a better company.
Well, we appreciate you taking the time to speak with us at the Northern Miner Podcast. Dean McPherson, Head of Business Development for Mining at TMX Group, thank you for joining us, and join us again on our podcast.
Thank you. My pleasure.
Well, never a dull moment around here. I'm, again, taken aback at the enthusiasm, really, for government to put direct investment into mines. I've basically been saying that for years, but I didn't think it would be popular. Again, out here, we like to keep things, basically the government out of our business as much as possible. But at a certain point, if the investment is not working and things are not getting built, perhaps, we need to veer from ideology into raw pragmatism, my friends. Thank you once again for joining me. I hope you're having a wonderful PDAC if you're there. Shout out to everybody who's out there. Look for our booth as well as a free copy of the Northern Miner. And if you want to help out the podcast, please leave us a review in the Apple Podcast directory. Share it with your friends. And until next week, take care.